All right, guys, welcome to this video. I'm going to be giving you my rundown and my thought process behind this insane W that I had on the markets today. Okay, so you're going to see a little bit of an insight onto how I caught this trade, a little bit about my executions on this one, and why I took this trade where I took it. Okay, first and foremost, we're looking at NQ. Okay, the Nasdaq 100 E-mini futures. All right. Now, market opens. Okay. Asia session opens up. But what I'm actually doing is I'm looking further back and I mark out the previous day, the previous daily range, okay, from the high to the low of that day. Okay. Let's just extend this out. Okay. So you can see for now. So basically what I'd done was I'd got the Fibonacci retracement tool and I ran from the low to the high of that day. Okay. Now these Fibonacci levels are my point of interests. Okay. Now for this particular trade, I was a little bit short bias. Reason being is because if you look historically, some huge volume pushed up here, leaving some massive, imbalance, fair value gaps, whatever you want to call it. And I'm sort of suspecting price comes back to fill these levels. Okay. Something like this. I'm more or less anticipating price to eventually retrace, eventually. Maybe not today, but for the most part, I am ultimately short bias until I see the previous daily high get pushed through. Okay, if that daily high gets pushed through, I might change my bias up a little bit. But for now, so long as I'm in the 50% range on the upper half, I'm looking for shorts. Ultimately, okay. So long as I'm in this range, I'm looking for shorts, and so long as I'm in this range, I'm looking for buys until I get some sort of, change in state of delivery. Okay. Does that make sense? The reason I'm short bias here is because we're above the 50% range, which is our premium of the range, meaning it's a bit overpriced. And this green would be the discount of that range, meaning it's, potential good discounted range. Anyway, at this current state, I was looking for long positions. Short positions. Okay. Let's watch how price plays out. Okay, market opens. Let's see. I noticed something interesting on market open. We kind of tap into that 786. Okay. So now I'm kind of watching price action. Okay, let's zoom in. Let's see. I see some big move down. Okay. I notice here that these lows get tagged. Okay. So, I'm kind of watching how the market responds off of these levels. Okay. We see this level get run through again. It pushes up. Notice it rides that 618 Fibonacci level. Now, this kind of opening gap here, if you know anything about these opening gaps, a lot of them get filled. Okay. So another reason I'm short bias is because I'm looking at this gap going, we're probably going to want to fill that gap at some stage. I don't know when, but I would like to see price come to fill this gap. So this is my thought process. Okay. What do we see? Ooh, we see this interesting structure happening here. Okay. We see this level get swept. Liquidity on this level gets swept. Okay. Which I like. I like the look of that. We see price reject off of that level. So it's showing a strong rejection at that level. We hit our 705 fib. We push through again. Let's see this. Boom. We leave another liquidity sweep there. See that? Boom. Passes through. We leave another liquidity sweep. At this point, yep, see there? Big candle comes up, pushes through that range. Okay. At this point, I'm looking at this level here, this rejection block. Okay. That candlestick there, that wick is kind of an interesting wick for me. Okay, this is an interesting wick here for me, okay? Because I look at this, I go, we've got this interesting level. It didn't quite get hit, but we saw some rejection off of it, okay? We've swept lows here. Price kind of, corrected again down. We had a bit of a rally back up. Swept liquidity again, boom, on that wick. Through that zone. Ran down, pushed up again, hit that, came up again. Swept. We saw a strong reaction off that zone. So for me, I'm looking at this level going, it's a high probability level for price to reverse. Okay. Not only that, if you look further left, we've got this kind of structure here that we've tapped into. Fair value gaps have been filled, order blocks have been tapped into, and so on and so forth. So at this point, I'm looking to take a short on this level. Okay. I literally do this. I set my short on that wick, the bottom of that body of the candle, okay? Stop loss, like 1 or 2 ticks above that high, okay? Something like that. Now in my head, I'm thinking, if we run this trade, I want to target that level there. It's a 13R. Ridiculously big trade, okay? Very, very low probability, but it's a big trade. I'm thinking, look, I'm happy to risk money at this level. Okay, so what do? I set a limit sell on that level. Okay, just like this. Boom. Watch what happens. Candles are coming close. I'm not FOMOing in. I'm sitting here with patience, waiting for that level to be tapped into. There it is. Level tapped. The very next candle we reject. Virtually no drawdown on this trade. Okay. At this point, I'm looking at this. Yep, I like it. Stop loss. I move it to break even, couple pips into profit kind of thing. So I know if it comes back out, I'm fine. It's safe. I knew price was highly likely to react off of this level. So with that being said, I put my stop loss to break even on that trade, just like that. Okay. Now I'm watching price action play out. Boom. At this point, I'm looking, going, okay, I'm hoping price runs that low all the way to fill that gap, right? This opening gap there. See how we play out, okay? And we kind of come back up a little bit. We keep pushing lower. As you can see there, we're sitting at around $700 PNL floating. Check there. We push down even more. At this point, I'm thinking to myself, okay, we're nearing this low. In hindsight, I may have targeted this low, but in my head, I thought to myself, we're nearing this low. This is an area, look, we didn't quite hit that level. If we run that low, we didn't quite hit that level. And it's also on the 618 fib. I'm thinking to myself, we've got a lot of hanging liquidity here. Have a look. Lows there, lows there. Look, I can run this all the way through. This whole range is liquidity. Okay? So I'm cautious at this level. At this point, I move my stop loss now because I think to myself, if price reacts and rejects, I think I move it to somewhere there in between this level to some ambiguous level. I think I had 580 there, something like that. Okay. I ran my stop loss. I trailed to that point there because I figured at this current state, if price comes back and fills me at that level, it's a nice, little 5.8R, something like that. Okay, nearly a 4.8, nearly a 5R, somewhere there. Anyway, we let price play out. See what happens. Boom. We tap that zone. Do you see that? We perfectly tap that level. Now I'm thinking, oh, okay, it's a bit sketchy. I've got my stop loss set. It's fine. I write the check, move on. Bang. We get stopped out on that pullback somewhere in there. Okay. We end up catching something like a 6R. or like what was it, a 5, just under a 5R on that level there, something like that. Okay, and that was literally my first trade of the day. You know, like I wanted it to keep targeting this level, but it didn't. And as we kind of went on throughout the day, it actually never came back to target that level. We're still kind of running into New York sessions about to open up. I wouldn't be surprised if New York comes in hot and just opens up that level. That's fine. But anyway, that was my first trade with a bit of my thought process there. Okay, does that make sense? Just trying to show you guys how kind of how you can start thinking. Anyway, that was my first trade of the day. Okay, now let me find my second trade that I took, which was like a 7R. Let me go find that quickly. Give me a second. All right, here is my second trade, okay, of the day, 7R. There's my executions there. Let me run you through my thought process on this trade. Okay, bear with me. Okay, I was watching this price action move up like this. Mind you, I've been waiting for this to pull back, but it hasn't pulled back. Okay, I'm running my Fibonacci levels on this range. Okay, we're on the 5-minute time frame now, by the way. I see this huge price action. I see it top here, bang, it starts to pull back. As you can see, from this bottom, from this leg up, pulls into the discount of the range. Okay, we consider that the discount of the range. This is the premium up here. Do you understand? Same as before. This is our short bias. This is our long bias. So we tap into this zone. Now I'm thinking we're going to go long, but I haven't seen enough confirmation or any other confluences here to just go long. We've tapped into the zone. Okay, let's see how we play out. Boom. What do I see? What do I notice? Okay, I want to see if you guys can pick this. We've got liquidity there. Liquidity there, okay? So this whole range is liquidity. Sitting on these little lows, okay? If we put this to the 1-minute time frame, okay? We've got this channel, more or less, which is, in a nutshell, it's basically just liquidity, yeah? I look at this, I go, yep, we sweep that liquidity. Let me just get rid of these little lines. So you can see that, right? We sweep the liquidity. Put it to our 5-minute here. What do I see? We sweep liquidity and we leave a nice clean rejection off of this Fibonacci level here. Okay. Nice clean reaction off that Fibonacci level there. So at this point, I'm looking for long positions here. Okay. Plain and simply. Something like this. And I want to target that high. What is that there? That's a 9.5R. Okay. I didn't catch the full move, but this was my thought process, okay? At this point, I've got my level marked. I scale to the 1-minute time frame. And I look like this, okay? I'm looking at it, I'm watching price, okay? Boom, it taps in, we tap into that level. Put us back into the 5-minute time frame. At that point, we set a buy stop. I'm wanting to see price push up through that level again. Because if we have volume to keep pushing us down, we invalidate the trade. Boom, enters us in. Comes back actually and tags us in again. Look at this move. Crazy. At this point, I put back onto the 1-minute time frame, okay? I'm watching how price reacts. I see this wick. Mind you, these are all unfilled fair value gaps on lower time frames. Look at that, boom. We wick into that level, close the trade. I'm happy with that. At that point, we catch something like a 7R. Like, does that make sense to you? If I went through that a bit quick, I mean, I know it's probably a bit confusing, but does that make sense to you? I anticipated this full range to be run, but at that point, as we sort of moved away from our entry level, I actually moved my stop loss to break even, same as the previous trade, because with this system, extremely low, these extremely low, tight risk levels, tight stop loss. Okay. Typically, we see price react from these levels quite cleanly, but then it just tends to turn around and blow straight through again. So for me, if that ever happens, at least stop loss at break even, because prices reacted quite well off that level. Boom. That is the trade there. I'll put both executions in as little images, but you could already see that one before we got into it. That's literally my thought process on this trade. What was that? Let me try and do the maths quickly. That was what, 1,300 US dollars for the day. 1,300 USD for the day. So what's that in AUD? 1,800 Australian dollars for the day, Monday, start of the week. In between all that, I went and had an unreal lunch, went to the gym. Like, bro, like, anyway, that was my thought process on these trades. So I traded these with my brothers as well. So we all had ideas and we all had thoughts regarding this. But ultimately, this was, this is basically what it looked like from a practical sense. So if that made sense to you guys, let me know. But like, this is a 7R trade, and the previous one that I'd taken was closed me out at like a 5R. I actually think it was even more, to be honest. I think it was closer to a 6R due to where my initial stop loss and everything was beforehand, and my entry or whatever. But yeah, that's kind of what I showed you. But yeah, 2 trades, 2 winning trades like that. Okay, like, yes, you need to expect these trades just to blow straight through these levels and you lose. That's perfectly within statistical norm of this trade. Like, you're going to lose a lot of these trades. It just so happened to be that this is my thought process was very, very spot on today. The headspace is in a good spot right now. So yeah, these were the trades. What do you guys think? And if you want to see more breakdowns like this and more of our thought process, here at the Trading Cartel, like, bro, like, get involved, so good. And it's only getting better and better. So yeah, I want to thank you all for being here, part of the journey. I'm keen to sort of see it where we can run this. But yeah, this is obviously on the replay tool, but I'll put the executions in so you guys can see that. But yeah, I thought I'd make this for you guys quickly. I could actually clip this up into 2 videos, but I'll probably just do it into one video. And yeah, hope you guys enjoyed and happy trading. Yeah, peace.